Our traders, Kenny Polcari and Alan Nuckman. Alan, you talk about shocks, right? You had Lori Logan, who is the Dallas Fed president, saying that, you know what, we could see some shocks in both directions that could alter the outlook here. But here's a shock. Goldman Sachs strategists say those juicy 13% average annual returns that the S&P has seen over the last 10 years will be no more. Goldman says they'll be sliced down to 3%. What would you think is behind that call, and do you agree with it?
No, I don't agree with it. It's a very aggressive call because you just talked about rates coming down. Let's remember we were at 5% just a year ago right now, and now we're down in the 4% range, or we will be by the end of here 2024. If you look out to the end of 2025, we're going to be down at 3%. So the question is, where's money going to go? The money that's in all these savings accounts that's getting 5%, we're going to be back to normal where interest rates are going to be low for those earnings off a deposit. So money has to go somewhere. We're still seeing earnings growth, and we are really in an everything bull market. It's just a matter of time now before the NASDAQ makes new all-time highs, and a full V recovery on the NASDAQ, like we've already seen in the S&P and the Dow, targets about 20% up above.
Okay, there's a big swath between 3% gains over 10 years annualized and a bull market party. Kenny, where do you stand?
So listen, Alan, I love you, but here's the deal. I don't see how rates can continue to go lower, like you say, to 4% to 3% over the next couple of years. Look what the bond market is telling you. The 10% yield now busted up and through the trend line of 4.17%, and look what's happening to the market. My sense is we're going to test higher, 4.3. I think the market's very worried about either side, Republicans or Democrats, spending way too much money that we don't have, which is going to cause, Janet Yellen to have to bring more supply to the market. And so I think that it's going to put pressure on the bond market, and yields are going to stay elevated. I don't think they're going to take off, but I don't think they're going to 3%. The way we originally thought. Because I was in your camp, I thought maybe yes, but I'm changing my mind on that, which is why I think we could see the market kind of have a little bit of a lid on it. I don't think it's going to 3% the way Goldman Sachs did.
The crowds at the SIBO, I don't know if they agree with Kenny or not, but we're hearing them screaming, Alan. So let's get a sense of where the money flows will go, you think, even if the Goldman Sachs call might be sort of, in the range. Because they also said, the strategists there also said that if the Mag 7 continue to power this market higher, then even so, the returns would be about 7% annualized over 10 years.
Well, NVIDIA is the great example. Right? Everyone was complaining when NVIDIA was too strong. Then it was too weak. Now it's gotten strong again. It's gotten back all of those losses, and now that projects to move up to 180. If you get Google on board, that's 10% of the NASDAQ. The NASDAQ's ready to run once again. Look at the earnings growth numbers. They're coming out solid. So, the overall market in general, you obviously have to be selective. When I was talking about rates, I'm talking about the short-term rates that the Fed controls. They're going to be bringing those down, and that's going to take the money out of the savings accounts. People are going to get nothing, just like they were used to for many years. This was a gift in the last year. That 5% was a gift for people. Now they're going to be scratching their heads what to do. The natural thing is to put it back into the stock market.
Is the rate cut cycle still on track, Kenny?
Well, so we just said at the beginning that maybe there's a no movement in November, which, by the way, I actually am in that camp because I think they were too aggressive in September. So I actually think there's a good shot that they come out and they leak it to the, Nikki Timrose at the Wall Street Journal after they go into the quiet period. No, I think actually in November there's not going to be a rate cut. I think they're going to end up doing nothing in November.
And then they're moving it. And in December, we're getting something by the end of the year, for sure.
Well, if we get something, the eco data has to show that the labor market, in fact, is weakening. And I'm not sure that we're going to see that.
Okay, if we have lower rates, but we have strong earnings, again, IBM, really interested to see what they report on Wednesday. It'll be so fascinating to see where investors really feel they have the most chance of really grabbing yield if they can't get it anymore in the money market funds and the short-term T-bills. So what do you think, Kenny?
So
money.
Go ahead, Al. Go ahead, Al.
Go ahead. So I'm just going to say money has to go somewhere.
Right. Right, it does. And so where's it going to go? I think it's going to go into the second derivative trade in tech. So the IBM, the Cisco's, the SAP, the Oracle, the Cisco are all going to be names that benefit in the second cycle of the AI revolution. I also think if rates really are going to go lower, I think that people are going to continue to move into the high dividend paying names and the utility names because they pay well and they give them exposure to the market.
Okay, Alan, you get the final word.
Well, that would be beneficial to the energy sector, which is the one sector that hasn't participated in this rally in the last 2 years. So there's a lot of value there, and that could lift a lot of boats. If that one energy sector starts to play ball, the whole market is now in a bull market.
Yeah, we've been in a bull market for quite some time, and I'm just looking at the VIX. It's now below 19, so no fear in the market.
Yep.
I don't know. Something could happen one of these days. Might not be pretty, but it's a buying opportunity, everybody. Kenny Allen, great to see you. Thank you very much for joining us.